Good people. Hello, everyone. Welcome, good people. My name is Wall Street Papi here. So, welcome to this session where I get to talk about supply and demand. Now, I am a supply and demand trader. I am a swing trader. I've been trading the financial markets. This is my seventh year now. And I have gotten quite a number of requests asking me about how to trade supply and demand. And looking at those number of requests, I felt that it is important I get to talk about how to trade supply and demand. So let's have a look at, as we get to do this session today, let's have a look at supply and demand trading. What is supply and demand? How do you trade supply and demand? All right. So from a very layman's language, from a very basic perspective, supply and demand is one of the most basic and fundamental. Is the is the most basic and fundamental. Uh, is the most basic and fundamental important rules of any economy. All right. So being able to understand the supply and demand forces in the market, not just in the financial markets alone, even in the day-to-day world of business. All right. So guys get to do business. If you probably have a running business, whether it is a shop or a supermarket or anything like that, you have to understand the laws of supply and demand. Right. So it's the most basic concept of supply and demand is the most basic and fundamental concept of any economy. So you get to understand how the forces of supply and demand get to work. Now, when it comes into the financial markets as well, supply and demand is very, very important, right? Supply and demand is very important because it helps you understand the forces that drive the financial markets, which are the forces of supply and demand. You get to understand the levels of supply, the levels of demand. You get to understand how orders are formed and filled in the financial markets. You get to understand how prices move in the markets in terms of following levels of supply and demand. So I have been trading supply and demand for quite a while now. That is my strategy. I don't use any other strategy apart from supply and demand. And I am a swing trader, so definitely I hold positions for several days, sometimes into weeks. And yes, that is what I do in these financial markets. Now, in terms of the instruments that I do trade, I trade currencies, all major pairs. Minor pairs, just a bit of Euro GBP, but very, very, very minimal. Then I do commodities like silver. I do US oil and UK oil, so that's basically crude oil and Brent oil. Then we do have the US index markets, that is Nasdaq and US 30. All right. So those are the markets. Those are the markets that I get to look at. Then also a bit of crypto as well for the guys, for my crypto guys as well. We got you covered. They get to look at BTC and Ethereum. Right. So that's what we have in terms of the instruments that I do trade. Now let's have a look at supply and demand. It's important to understand now from the very basic understanding of knowing that it is a basic fundamental concept of any economy. Let's get to see how does supply work, how does demand work, and how do you merge this concept now into the financial markets, right? Now, on my screen right here, you can see levels that I have plotted on my screen. Now, the basic understanding for a layman in the financial markets, they'd call these levels of support and resistance. But as myself, these are levels of supply and demand. I'm able to tell where supply is in the market. I'm able to tell where demand is in the market and what to do when price gets to those levels of interest, right? Now, when it comes to supply and demand trading, this style of trading can be used whether you are a scalper, whether you are a day trader, whether you are a swing trader. It's only that I specialize in swing trading. So, and from the various interactions I've had with the majority of people, one of the questions that I usually get quite a lot of times is how can supply demand be used for day trading, or can it be used for scalping? And the answer is yes. It can be used for day trading. It can be used for scalping. I use it for swing trading. Others I know who actually get to use it even for position trading, and they are position trading. That time they're position trading equities, right? So it is something that I've seen work. It has worked for it has worked for me. It has worked for many others out there. So even for you listening out there, definitely it can work for you. All right. Now let's get into it. Let's get deeper into it and let's see now the intricacies and the dynamics of how the concepts of supply and demand get to work in the financial markets. Now, this is my screen right here. Right. You can easily get to check it out. You can see my levels of interest. You can see it's marked with quite a bit of levels. These are levels of supply and demand, all right? So we have this kind of scenario. It's important to first start from the different types, the different categories of setups in supply and demand. Now, when we are coming into supply and demand, so have these as supply and demand strategy. So this is strategy talk, right? This is a more of a strategy talk. I think I will be doing more of these, and even guys, feel free to share on the comment section what you anticipate. All right, feel free to share for me in the comment section what you'd like to learn in terms of supply and demand, and definitely we have you covered. So when it comes to supply and demand, when it comes to the supply and demand strategy, this is what we usually have. We have two main two main categories of setups in supply and demand. All right. So this is how we have categories. Let me type this. So we have categories. Let me change the color to just this one. We have categories of supply and we have categories of, so yes, categories. We have categories of setups in supply and demand. When I write SD, SD means supply and demand. So we have two major categories of setups in supply and demand. Okay, we have reversal setups, and we have continuation setups. All right. So what does reversal mean? What does continuation mean? All right, we start from there. We've talked about the two major categories of setups in supply and demand. We have reversal setups and continuation setups. So what are these reversal and continuation setups that we're talking about? Now, when price, for example, when price has been on a downtrend like this, yeah, price has been on a downtrend like this, then it gets to a level of demand. It stops going down and now starts pushing to the upside. Previously, it was going down. Now it stops going down and starts going up. What has happened? It has changed the direction. So changing that direction is what is known as a reversal, right? That is what is known as a reversal. When the market stops going down and starts going up, that is a reversal. Same case, when price was pushing up, like now from here all the way to this. Then it got to this level. It stopped pushing up. What did it do? It starts coming down. So that change of direction from going up now into going down is what is known as a reversal. Right? So a reversal is basically the change of direction or bias in any market. All right. So we have reversal setups, and then now we have continuation setups. So what does a continuation setup mean? A continuation setup is whereby we have price keeps pushing into the prevailing direction, right? So for example, if price was pushing up from a level like this one here, right? Like an area like this, price pushes from here, breaks above a supply, all right? Breaks above a level of supply, and instead of reversing, right? What it does, it breaks above, retests the broken supply as a new demand, then keeps pushing higher, goes in the same direction. It doesn't change direction. That is what is known as a continuation. And a continuation setups happen for both. Continuation setups happens for both cases, whether market is going up or whether market is going down. All right. So, like in this example here, you can see when price is pushing to the upside, breaks as a level of supply, retests it as a new level of demand. Before now, a continuation. Before a continuation of the rally higher, right? So that is the continuation, right? We have reversal and continuation. We have reversal and continuation setups. Those are the two major categories of setups in supply and demand. All right. Now that you have this, now then let's look at the types of setups in supply and demand. So what are some of the types of setups that we usually look out for in supply and demand? So you have now the types of setups in supply and demand. So now these types fall under the two categories, the reversal and continuation. So you have the rally, base, drop. Then you have the drop, base, rally. Then you have a drop, base, drop. Then you have a rally, base, rally, like that, right? So we have that. We have a rally-based drop, we have a drop-based rally, we have a drop-based drop, and a rally-based rally. Now, each of these setups fall under either the reversal or continuation. For example, now the rally-based drop, this is a reversal. Okay, these are reversal. Then the drop-based rally as well is a reversal. Then the drop-based drop, this is a continuation. Then a rally-based rally, this is also a continuation, like that. Okay. So this is what we usually have. These are now the four types of setups. We've started breaking it down from the categories, the two major categories, the reversal and continuation. And then now we have the types of setups, which are now the four types of setups, right? You have the rally-based drop, you have the drop-based rally, you have the rally-based rally, and the drop-based drop. So we have two reversals, two continuations, right? So how are you able to identify such kind of scenarios in the market? Okay, that now becomes the next area of or the next key. That becomes the next key concern. How do you identify these areas of how are you able to identify these kind of setups in the markets? Okay, so you come to the charts. This is what you have. You come to the charts. Then when you come to the charts, you get to look at these kind of scenarios. Like now, for example, here we have a rally-based rally. Here I have a rally-based rally, and I can see a drop-based drop as well. So let me start off with these two. So a rally-based rally is like the example that I gave here. Price was bullish, breaks above, forms a higher high, comes to retest the broken supply as a new demand. Because usually even when you're talking about support and resistance, when support is broken, it becomes resistance. When a resistance level is broken, it becomes support. All right. So here we have a level of supply that gets broken, then it becomes demand. All right. So, and for you to be able to identify a true breakout from a fake breakout, because again, we have true breakouts and fake breakouts. So, price must always form a new high if it is breaking supply, or a new low if it is breaking demand. Right. So, price forms either a new high if it is a break of supply, or a new low if it is a break of demand. Then now, like how here you can see a new high has formed, then retracement with price coming back to this demand, then a continuation of the rally higher. So a rally-based rally. So in this instance, okay, in this kind of scenario, what you usually do is, if it is a bullish continuation, then definitely you're looking for potential buys for price to keep pushing higher. All right. So when price comes to retest the broken supply as a new demand, this is the area you'll be looking for potential buys. All right, this is the area you'll be looking for potential buys. Then you have your stops right below these. You have your stop losses or your stops right below the zone. Then your target is at the next key area of supply. So this will be your TP, like that. All right. So that is how I usually approach. Yeah, that is how I usually approach a continuation setup for the rally-based rally. So this is an RBR. Okay, a rally-based rally is an RBR. All right. So this is a rally-based rally. And then here we also have, let me see what we have. We have this, then here again we had a drop. Here we had a drop, base, then drop. Price drops all the way down to this. So here we have the drop. Here you have the base, then the drop. Again, this is a continuation setup. Why? Because price started reversing from these highs. This was a key level. It broke below, retested, then kept pushing lower. So what does this make? What does it make this kind of setup? These are continuation. These are bearish continuation setup. Right? So, and with a bearish continuation setup, what kind of structure are we looking out for? We are looking out for price forming supplies and a continuation of the drop lower. So a DBD means a bearish continuation, right? And it is this kind of structure that usually forms in the financial markets. All right. So in this kind of scenario, you wait for the retest. So this was a retest here. Then you're looking for sells, right? You want to be a seller in that market. Then you have your stops above, right? You have your stops above the level, then your target at the next demand. So anytime you see a base is a level of supply or demand. All right. The rally, the drop, the rally, the drop, the rally, the drop, those are the moves. But the base is usually either a supply or a demand level, right? So we have that. We've covered the DBD, that is a continuation, and the RBR, which is a continuation. The rally base rally is a bullish continuation, all right? And I've shown you how to take your positions, even in terms of approaching the setup of a rally based rally, the bullish continuation, and a DBD, a drop based drop kind of scenario. Same case if price had, let's say, for example, if price had broken below this level here, because this was now a drop, then if you saw price break below, then retest, then push to the downside like this. These will also have been these will also have been a DBD. So this will have been a drop. Then the base is this area, then the drop like that. Okay, so it will have been a DBD kind of scenario. This is a drop base. This will have been a drop base drop kind of scenario, right? So we have that. Let's observe and see how this kind of structure forms. But now this is usually the criteria that we use when you're taking the continuation setups, whether it is a bullish continuation or a bearish continuation. The RBR is a bullish continuation. The DBD, the drop based drop, is a bearish continuation, right? So then we come to the reversals. So into the reversals, we have a bullish reversal and a bearish reversal. All right. When it comes to the market, you have a bullish reversal and a bearish reversal. So let me start with the bearish one because I already have a setup in mind that has a bearish reversal, and it is one of the active setups that we have even on our weekly outlook and the midweek review. So this setup is on NZD USD. So we have this. Let me have again. This is also another good RBR. All right, this is another good RBR kind of scenario here. Let's see NZD USD. NZD USD right here. There it is. Now this is a standard bearish reversal. All right, this is a standard bearish reversal. Now we had price rally. This is the rally here. This is the rally into supply. Okay, so this is the rally. This is the base, and then now this is the drop. So this is the RBD. You've talked about these two as well. So now this is the RBD. The rally into the supply. The base is the supply, then the drop. That is a bearish reversal. Same thing with what happened. These are rally, base, then drop. So this is an RBD, like that. All right. Now, when it comes to setups, how do you approach it now, this kind of scenario? Usually, you have usually have aggressive entries and conservative entries. All right. So we have aggressive, aggressive entries. You have aggressive and you have conservative. Conservative entries. So aggressive entries are the ones that we take without any form of confirmation. Like now here, when price got to this area, we didn't have a confirmation of whether price is going to hold at this supply or it's going to break above and keep pushing higher. So what has happened is price has held at this supply, all right? And what we are seeing is just a second. Just a second. So when it comes to the rally-based drop, we have the rally into supply. Supply is the base. Then you have the drop and price pushing to the downside. All right. So we have this now. In terms of entries, how do you approach your entries? So price comes into this. Usually wait for now that I've talked about aggressive and conservative entries. So instead of looking for the aggressive entries without confirmations at this area, you'd rather look for the conservative entries. All right. So conservative entries are usually very important. Okay. Conservative entries are usually very important because you have multiple confirmations for the trade that you're taking. All right. So in this kind of scenario, this is the area you'll be looking for potential sells. Sell. Then you have your stops above like this. You have your stops above. Then your target at the next key demand, either there or even somewhere like this key low here. This can also form a target area. This can also form a target area like that. All right. So we have that. Then we have that. So this is our RBD. These are rally-based drop. We have these. Then let's have a look at now the drop-based rally. Perfect one. It's even here. The drop-based rally is something like this. We had a drop into demand. Okay. So this is the D. This is the base. Then the rally out of demand. All right. So this is the DBR, a drop-based rally. All right. This is a drop-based rally. This is a bullish reversal. All right. So this is a bearish reversal, bullish reversal, bearish continuation, bullish continuation. So price drops into demand. Okay, that is the drop. Then the base is the demand. Then the rally out of demand is now, this is the rally. So in terms of approaching the setup, this is what you do. So you have price, you are looking for potential buys at this area here because you want to be a buyer at demand. So you buy at an area like that. Then you have your stops below. Then you have your target at an area like either this supply or when price breaks above. Now this was also an RBR. This was a rally base rally because this was the rally, this was the buzz, then the rally, a continuation of the rally high, and price pushes all the way. Price pushes all the way to these areas of 0.6500 areas. All right. So here we have both. So here we have both the RBD, the rally-based drop, and we have the DBR, the drop-based rally, and also the RBR, which is the rally-based rally, on the same setup. Two reversals, one continuation. All right. So that is how to approach supply and demand in terms of being able to understand the categories, the types of setups, and also how to do your entries. All right. So this is the best way to do it. And then you get to practice it over a period of time, get to practice it across multiple currencies, multiple commodities, do it on indices. You will do the same thing even on crypto. You'll do the same thing even on futures. So same strategy across various asset classes, right? So it's very important, very, very important. You get to understand this concept. I will be releasing more of these videos very soon. So this is the first one in terms of basic supply and demand understanding. So probably the next one I'll do now how to mark these levels, these zones that you're seeing here on my screen, the levels of supply and demand. I will be able to mark them out and also now show you in terms of how to do your entries, how to scale in positions, and also how to do multi-time frame analysis as well. So toggle between the different time frames to be able to get the result that you are anticipating. All right. So with that, guys, this is the start of this journey. So we have the supply and demand. We have supply and demand 101 right here. Being able to understand the categories, the different types, and how to place this. I mean, how to do your positions. But definitely, we will go deeper and deeper into this as we get to progress. So thank you, guys. Looking forward to seeing you on the next one. So cheers, guys. Stay blessed and stay financially literate. Let's meet up on the next one. Cheers.